All right, so welcome to our weekly live session. Before we get started with going over the overall market, I wanted to recap a few different stocks that we talked about in our previous live sessions. So the first one is BIDU. This one was mentioned in our very first live session, which was 2 weeks ago. And I mentioned that it was in a downtrend showing some consolidation. We're looking for a breakout of 155.5, and we were able to get that. We closed above the the bearish trend line here and closed above the breakout area. I mentioned the targets of 162.28 and 167. The next day it rallied up to the first target, and today it hit that second target before selling off. And then for the next one, we're looking at Uber. With Uber, we rallied up. I called it out here, and I was saying to look for a breakout. And in this area, during like this consolidation phase, just stay out of it. But basically, it did pop up, and this is the day, I want to say on Thursday of last week, is when our team ended up buying some options on this. We sold it the next day. Didn't go up to our target, but it went up to that $49 price before selling off. And with that one, we're able to we got two different contracts, and one was a 68% profit, and then the other was 43%. After today, with the market reversing, it did pull back. So this one still has opportunity to rally up to our target. I would say with this one, wait for it to push back up above our breakout area of 47.43. And there is a little bit of a trend line there. So we could potentially see, a retest of that. Let's see, the 100 SMA, and then bounce back up. So keep an eye on Uber here. And then our other one is LVS. I believe I mentioned this 2 weeks ago. When I called it out, it was consolidating within this range. Finally popped above our breakout area today, and there's some decent volume coming in. So this one, I will watch this one for, a day trade tomorrow. It can go back up to the 50 SMA where you can take some profit, and then potentially up to the first target as well. If it can close above this lower portion of the bearish channel, then it will rally back up to, $41.70, since there is this gap right here. So we'll want to fill that gap, and that's if it closes above that lower part of the bearish channel. And then for SPY, we have some new levels to pay attention to. So what we're looking at now is it popped up above our bearish trend line, and it looked good to start pushing up, but it kind of failed, not enough volume. Right here, the volume kind of died down, and then today we closed below it. We need to pop back up above that trend line in order to be, overall bullish, and it needs to hold above 434.6. If it does end up breaking below that strong support, then anywhere between our breakdown level, which is at 426.36 and 434.6, all that is going to be, a consolidation area. So that's where you want to be very hesitant. Either just wait for a close below our breakdown area, or for it to, regain above that bearish trend line and a push up towards our breakout area. If it does head towards our breakout area of 441.68, then I expect it to continue up over the 50 SMA and up to our target 446.75. And then, like I said, if it closes below, our breakdown area, then our downside target is at 421.25. And then one thing I also noticed that I wanted to mention, so here we could potentially have a falling wedge, because there's this trend line there. Let's see. And then this one here. All right, so let me change this so you guys can see it a little bit better. So if we fall back into this area during that consolidation phase, we can kind of just keep grinding lower within this this falling wedge, and then potentially shoot up, because with falling wedges, 70 to 80% of the time they'll break out to the upside, and then vice versa. With the rising wedge, it will break down. So keep an eye on that. If that is the case and we are in like this falling wedge pattern, then I would say most likely it's going to be news related. Like, depending on what type of news comes out, it will either break down or break up, but that's just something to keep in mind. All right, so here is our first stock that I'm watching this week. So this is AMD. We have a bullish trend line, which has been support here, 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 and also here. We're starting to show signs of a push up above this descending triangle. And here it needs to hold above 104.44. And it's kind of consolidating, still holding above, that resistance part of the descending triangle. But once it can push up above our breakout of 108.44, then we're looking good for a move up to 112.50 and potentially at 117.70. All right, so our next one is Boeing. Boeing has been consolidating in between our strong support level of 221 and our breakout area of 229.94. It's also tried multiple times to push up above this bearish trend line here, but every single time it kind of just gets rejected by these SMA lines. So once it can have some follow through and some like buying volume to pick back up, once it closes above our breakout, then we're looking good for a gap fill here, which is at 234.4 and up to our target at 236. All right. So our next one is Box. BOX is the ticker. It's heading up towards this trend line within this more of a sideways channel. It closed above our breakout, but I'm looking for a fall through above this trend line, so it closed above the trend line on the daily. And then once it does, then we're looking good for a push up to our target to 26.5. And if it honestly can push above that, that resistance area, most likely will push even higher, probably to this previous high here, which is right around 27.5. So keep an eye on that. I'm not super confident in this, but if it does push above, then it'll definitely be a good play. And then for our fourth one is BYND. All right. So for BYND, it's in this bearish channel here, and it's showing some consolidation. So I'm looking for a break below our breakdown area of 98.8 or above our breakout area, which is at $106.01. And then in between this range, I wouldn't even touch it. Just wait for, some type of confirmation to the downside or to the upside. If it can push up and above our breakout area, then it looks good for a push to our first target of $110.50. And then our second target is at that 50 SMA, which is at $115. And if it closes below our breakdown level of 98.8, then this will drop even lower down to 94.25. All right, so our next one is Robinhood, ticker is HOOD. So it was in a falling wedge, pushed up and broke out, but right now it's just consolidating between our breakout area of 42.84 and our strong support level of $40.25. If it closes below our, our strong support at $40.25, then it's definitely going to head lower. It looks good as of now. We'll see where it's at tomorrow and over the next coming days. But if it can close above our breakout and hold as support, then it looks good for a run up to 44.9, which is our first target, and potentially up to 47.5. Looks like earnings are on the 26th of this month, so we have basically like 2 weeks until earnings. I would definitely not hold it during earnings because ultimately, holding during earnings are a gamble. But up until, earnings, and maybe if there's like a run up into earnings, then definitely take advantage of that. So I see one question, and after I cover this one, which is our last stock, I'll definitely touch base on your question there. So give me 1 second. So yeah, last one is SOFI, ticker's SOFI. It has this megaphone pattern, and today there's a lot of buying volume that came in. It closed above our breakout area, so as long as it continues to hold that breakout support, which is at $18.08 on the daily, then this looks good for a run to our first target of $19 and potentially up to our second target of $20.45. If it does push up tomorrow, we could, see some, or within the next couple days, see some rejection at that top of, that resistance area of the megaphone pattern. So just keep that in mind. But this looks good for a day trade and potentially, a swing as long as that breakout holds. And then let me cover this question. All right, so the first part of the question is, how do you see if a big buyer is coming in, wearing Thinkorswim? So on this platform, which is Thinkorswim, what I'm looking at is down here at the volume section, the volume indicator, and this blue line shows the average. So for example, with SOFI, since it closed above that blue level on the daily, that's above average volume. So whenever you are, let's say, looking at a stock and it's in some type of, pattern, let's say it's in, a falling wedge. A good example would be Hood that we just looked at. So since this recently IPO'd, it didn't show all the volume bars that it normally would back here. But let's say if it did, and you're looking at this, you want to see above average volume during a crucial breakout. So with a pattern like this, we would see above average volume here, which would give you indication there's going to be good follow through. Whenever there's low volume, you normally don't want to do it because you can easily get faked out. And then the second part of the question, let's see. So what's best? So the second part of this question, he said, what's the best volume and options to buy or to sell? So with that, let's say, So for hood, what you want to look at is volume and open interest. So it depends how many contracts you're buying, but a good rule you can have for a minimum is at least 100 in volume. Actually, no, 100 in open interest and at least some activity in volume for the day. So let's say, let's find a stock that might not have as much. Let's see. All right, so this is a good example. So this is General Dynamics, ticker is GD. So when you're looking at the option contract, here on the call side, you have 116 in open interest and 88 in volume. And then down here, you have 8 open interest and 4 in volume. Right below it, you have 238 and 4. So with this, I would choose the one that's right at the money, which is the $205 call. Just because there's a lot more open interest, so there's a lot more activity going on with that option contract. Because if you're stuck with something like the 207.5 call, or even 212.5 or 215, you're not going to be able to sell it to anyone when the time comes. So you'd want to pick something like this or something that's in the money. But like I said, a good rule of thumb is to have something around 100 open interest and then some type of activity in the volume. And then if you're going big, if you're doing like 15, 20 contracts, then it's going to matter a little bit more. But if you're doing under 10, that's a good rule of thumb. But that's going to wrap it up for today's weekly live session. If anyone's not already subscribed to our YouTube channel, feel free to subscribe, and then you'll get notified every week when we do these. And yeah, we'll see you next week. Good luck.